Hey everyone, welcome back to Corporate Decoder, the place where we untangle the financial webs of big companies, maybe even discover some hidden gold, or maybe just a lot of paperwork. In today's episode, we are diving deep into the latest shareholder report from Exchange Traded Concepts Trust, focusing on two of their exchange traded funds, EMQQ and FMQQ. These funds are all about emerging markets internet companies and frontier market internet companies respectively, so we are talking about some potentially high growth but also high risk investments. Stick around because we will break down their performance, their costs, and what they are actually investing in, and give you a clear picture of what is happening behind the scenes. And hey, if you are new here or just appreciate getting clear, no-nonsense financial insights, make sure you are subscribed to Corporate Decoder. Also, we have a fantastic community building over on our Discord server, link in the description, so join us there. Alright, first up, EMQQ, the Emerging Markets Internet ETF. This fund aims to mirror the performance of the EMQQ, the Emerging Markets Internet Index. For the last year, the costs associated with a hypothetical $10,000 investment in EMQQ were $98. This translates to a cost of 0.86% of your investment. Pretty standard stuff for an ETF. Now for the performance for the fiscal year ending the 31st of August 2025, EMQQ delivered a total return of 26.90% at net asset value. That is a pretty solid return, driven mainly by strong performance from Chinese internet companies who are really pushing ahead with artificial intelligence initiatives. Companies in Latin America and Southeast Asia also did well thanks to e-commerce and fintech growth. Even the prospect of interest rate cuts in 2025 gave a little boost to emerging market assets. Looking at the last decade, EMQQ has shown a total return of 8.60% over the last 10 years. That is compared to the MSCI Emerging Markets Index, which returned about 6.92%, and the S&P 500, which pulled in a remarkable 14.60%. So while EMQQ has performed well, it has lagged behind the broad US market over the long term. Let's look at the actual numbers on this historical performance chart. Back on the 15th of August 2015, a $10,000 investment in EMQQ would have grown to a respectable $22,811 by the 31st of August 2025. That is a good return over that decade. As of the 31st of August 2025, EMQQ had total net assets of $375,117,511 and held 57 different investments. The portfolio turnover rate was 25%. That means about a quarter of the fund's holdings were bought or sold during the year. In terms of sector exposure, consumer discretionary makes up the largest chunk at 48.0%, followed by communication services at 24.1% and financials at 17.1%. Not surprisingly, technology is present, but with only 0.9%, it is not the main focus, which is interesting given the fund's name. The top 10 holdings give us a clearer picture of where the money is going. Tencent Holdings is at the top, holding 6.9% of the fund. Following closely are PDD Holdings, Alibaba Group Holding, and Mercado. You can see a strong concentration in a few large internet companies. A notable change for EMQQ is that effective the 1st of June 2025, the sub-advisory agreement with Pensera Capital Management LLC was terminated. Basically, the main advisor Exchange Traded Concepts LLC took over all the duties. This change does not affect the fund's investment goal. Now let's shift gears to its sibling FMQ, the Next Frontier Internet ETF. This fund focuses on emerging internet companies in frontier markets. Think of places with even less development and potentially higher risk than those in EMQQ. For FMQQ, the costs for a hypothetical $10,000 investment were $91 for the last year, representing 0.86% of the investment. Again, quite similar to EMQQ. In terms of performance, FMQQ delivered a total return of 12.54% for the fiscal year ending the 31st of August 2025. This performance was mainly driven by Latin American internet companies and those in Southeast Asia showing strong growth in e-commerce and fintech. Interest rate cut expectations also provided a boost. FMQQ is a newer fund, having started on the 27th of September 2021. Since its inception, the fund has seen a significant annualized return of negative 12.93%. That is a tough one, and it highlights the volatility inherent in frontier markets. Even the broader MSCI Emerging Markets Index has done much better since inception, with a positive 2.37%. Looking at the historical table, a $10,000 investment in FMQQ since its inception has shrunk to $5,803 by the 31st of August 2025. This is a substantial loss, a stark contrast to MQQ's positive growth. FMQQ had total net assets of $31,647,532 as of the 31st of August 2025, with 35 holdings. The portfolio turnover rate was 21%. For FMQQ, financials are the largest sector at 39.0%, followed by consumer discretionary at 38.0%. These two sectors dominate the fund. The top holdings in FMQQ include CADR New Holdings, CLA, and Mercado Libre. Similar to EMQQ, there is a concentration in a few key companies. Now, for the really interesting part, the actual investments for EMQQ, the Emerging Markets Internet ETF, we can see a deep dive into their portfolio as of the 31st of August 2025. This section shows the breakdown of their common stock investments by country. China is the largest at 41.2%. This is followed by India at 19.2% and Brazil at 13.5%. Digging into China, we see a significant concentration in communication services and consumer discretionary sectors. Names like Tencent Holdings, Alibaba Group Holding, and PDD Holdings are prominent. Now let us look at the detailed schedule of investments for MQQ. We see a lot of familiar names here. For example, in Brazil, Mercado Libre holds a substantial position. In China, Tencent Holdings is the largest holding. Looking at India, we see Reliance Industries as a major player in the energy sector. They also have significant holdings in financials and consumer discretionary companies. Moving on to the FMQQ fund schedule of investments, we see a different geographical focus as expected. Brazil leads with 23.8% and India with 42.3%. Within India, FMQQ has heavy exposure to financials at 16.7% and consumer discretionary at 13.5%. Again, Reliance Industries is a major holding contributing to the energy sector. Let's look at the balance sheet for both funds. For EMQQ, the net assets were $375,117,511. For FMQQ, net assets were $31,647,532. It is interesting to note that EMQQ has paid in capital of over $752 million, offset by accumulated losses of around $377 million. For FMQQ, paid in capital is about $32 million, with accumulated losses around $1.2 million. This difference highlights their different performance trajectories. Now let's check out how these funds made or lost money in the statement of operations for the year ended the 31st of August 2025. EMQQ had a net investment income loss of $771,062, but a significant net realized and unrealized gain of over $86 million. This shows that while the day-to-day income isn't always positive, the market value of their holdings drove the overall profit. FMQQ, on the other hand, had a net investment income loss of $141,612, but a net realized and unrealized gain of about $3.7 million. The gains here are much smaller, reflecting its more challenging performance. Looking at the statements of changes in net assets for MQQ, the fund saw a net increase of over $11 million during the year ended the 31st of August 2025. This is a positive sign after a challenging previous year where they saw a decrease of over $132 million. For FMQQ, the picture is quite different. They experienced a net increase in net assets of over $1.4 million for the year, ended the 31st of August 2025. This is after a positive increase of over $11 million in the prior year, showing a continued upward trend in asset growth for this fund despite its lower returns. Now let's look at the financial highlights section by share. For EMQQ, the net asset value per S-share ended at $42.87 on the 31st of August 2025. This is up significantly from the prior year. The total return of 26.90% is very strong. The expenses for MQQ remain consistent at 0.86%, and the net investment income ratio shows a slight loss at negative 0.21%. For FMQQ, the net asset value per S-share ended at $14.89 on the 31st of August 2025. The total return for the year was 12.54%. Expenses are also at 0.86%, and the net investment income ratio shows a loss of negative 0.48%. This confirms the performance trends we saw earlier. In the notes to the financial statements, we find important details. For both funds, they are classified as non-diversified, meaning they can invest a larger portion of their assets in a small number of issuers. This can lead to higher volatility. The funds use fair value accounting for their investments. This is pretty standard for investment funds, but it means that determining the exact value can sometimes rely on estimates, especially for less liquid assets. The report also details foreign taxes. Both MQQ and FMQ are subject to taxes in the countries they invest in, which reduces their overall returns. For MQQ, these foreign taxes amounted to over $892,000 for the year. For FMQQ, it was around $41,000. Now let's talk about the risks. These are crucial for understanding what could go wrong. MQQ and FMQ face currency exchange rate risk, where fluctuations in foreign currencies can impact returns. They also deal with emerging market securities risk and frontier market risk given their investment focus in less developed economies. The non-diversification risk is particularly important for these funds. It means that if a few key companies within these funds perform poorly, it can have a big negative impact on the entire fund. This was evident in FMQQ's long-term performance. Looking ahead, the report mentions that the funds have evaluated subsequent events through the date the financial statements were issued and no additional disclosures or adjustments were required. This means no major surprises are expected right after this reporting period. So what is my take on these filings? For EMQQ, the Emerging Markets Internet ETF, it shows a strong recovery and solid performance in the past year driven by tech giants in Asia and growth in other emerging markets. The long-term returns still lag behind the S&P 500, but the fund is a significant player in its niche. The concentration in top holdings could be a double-edged sword offering high reward, but also higher risk if those specific companies stumble. FMQQ, the next frontier internet ETF, tells a much different story. Its performance since inception has been quite poor with significant losses. While recent performance has improved, it is still a much riskier proposition. The higher exposure to financial and discretionary sectors in frontier markets is a big bet on economic development, which can be highly volatile. Both funds are non-diversified, which is a critical risk factor investors need to understand. If you are looking for aggressive growth and can tolerate high volatility, these funds might be of interest. However, for long-term stability or capital preservation, they likely are not the best choices given their inherent risks and historical performance challenges, especially for FMQQ. Alright, that is our breakdown of exchange-traded concepts, Trust's latest shareholder reports. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.